Good afternoon, everyone. I'm Poppy Behrens, publisher at Modern Storage Media, and I'd like to welcome you to today's webinar. This is one of several educational webinars planned for self-storage owners, operators, developers, investors, managers, and other industry professionals. Before we start, there will be a Q&A session at the end of the webinar. Please submit your questions throughout the webinar using the Q&A feature on your screen. We will answer as many questions as time permits. Any unanswered questions will be addressed privately after the webinar concludes. Today's webinar is presented by Storage Commander, a company that has empowered self-storage professionals with cutting-edge business management solutions for over 25 years. What began as a family-owned business has grown into a trusted and well-respected name known for its expertise and friendly approach in the self-storage industry. Storage Commander understands the power of genuine connections and the importance of nurturing relationships. The company's success is intertwined with that of their partners, whether they be facility owners, managers, or tenants. Through steadfast collaboration and a deep understanding of its clients' unique needs, Storage Commander has crafted tailor-made solutions that drive mutual growth and prosperity. Our presenters today are Richard Witka, Vice President of Sales at Storage Commander, and John Cohen, Storage Commander's Director of Marketing. And now it is my pleasure to turn the webinar over to Richard and John.
Thank you, Poppy. We're very excited to be here today to speak on this really awesome topic. Thanks to all the attendees that signed up and are joining us. We hope you find it very, very informative. I'm going to go through the agenda real quick. We're going to do the introduction, which concludes now. We're going to talk a little bit about the research, key findings, and then at the end, we're going to do a Q&A like Poppy said. So first and foremost, we do want to highlight a little bit about Storage Commander. So on the next slide, you'll see that a couple of screenshots in March of 2025, coming up on a year at the SSA show in Orlando, we launched our SE Navigator, our fully cloud-based platform designed to drive financial performance for self-storage operators. As Poppy said, this is a long time coming. We've been in this industry for over 20 years. We launched this platform as a best in class and a best in product from Storage Commander. And our ultimate goal here is to create a customizable and scalable self-storage management software engineered for both growth and profitability. So we're very excited to have SE Navigator out into the market. And certainly anybody on this that would like to learn more, please reach out to us. But that's not what this is about. We're going to get into the Storage Commander market report, and I'm going to pass it off to John for him to go through the research.
Thank you, Richard and Poppy and team. Appreciate your time. One of the things that we think is interesting, and certainly haven't been in the business as long as we have, is the ability to look backwards as well as forward. And as part of that perspective, trying to see how things have changed, what's happening, we took upon ourselves to begin a process of querying and asking people in the industry about how 2025 was going, how 2026 looks like it's going to go. And we took our internal research and mapped it to research from companies such as Yardi and Modern Storage Media and CBRE and a variety of other companies, and came about with this assessment of the marketplace. What's interesting in this assessment is that although there's some variation between the sources of research, the overall numbers are about the same regarding areas of investment and concern. And one of the common themes you'll see in our study, you'll hear throughout this presentation, is one of cautious optimism and a focus on improving what you have more so than growing to where you want to be. We've seen pressures from like increased expansion, oversupply in some areas, and also things regarding like interest rates, just general market conditions are kind of putting people in a overall wait and see perspective. So we're going to go through a series of slides. If we can advance to the next slide, one of the first questions we started with was to ask individuals, where do they see their greatest business success in 2025? And really what we saw is people focusing on operational efficiency. 27% of the people really looked at that. The initial 17% saw results from stronger marketing, and 17% saw success in raising rates without upsetting their customers. So more than half the people who responded to the survey, about 60%, really saw success in those areas. To a lesser extent, those certainly important areas like improvement in tenant experience and some expansion were important also in this space. What this means for operators, if you move on to the next slide, is that efficiency isn't necessarily a cost saver. I think it just becomes a matter of fact the way you have to operate your businesses. And the software and technology exists these days to streamline a lot of functions and allows businesses to focus on what's important. What's interesting, if you move on to the next slide here, is that when asked about challenges in 2025, people saw that decreasing occupancy was their overall greatest challenge, followed by acquisition. They go one hand in hand, and then increased local competition. There's an interesting underlying fact here too that we've seen, which is that on average it costs about $200 to $300 to acquire a customer, but the cost of losing a customer could be thousands of dollars if you look at ongoing revenue from recurring monthly payments, and things such as having to reacquire new customers and meeting competition. Inflation and expenses are issues, but really people focus on areas regarding occupancy and trying to get the most out of the units they have. And to a lesser extent, staffing was also an issue as well. What this means for people in this space, if you care to pop on, is just that competition really isn't price, it's more performance. And what I'd also say is, and we'll get into this later on, is the idea of having a good retention program is also important. Something that didn't really come through among the people we talked to, but I think is important for people to consider, is the fact that your renewal process begins the moment you sign someone on, and your retention efforts start the moment the deal is closed. And we don't see a lot of people considering retention being successful because we suspect, though I don't believe the data shows this yet, that there aren't strong retention programs in place in this space. How do people feel about overcoming these challenges? You can look at this as a glass is half full versus glass is half empty type of thing. I mean, 60% of the people are either somewhat confident or confident, but the majority of people being somewhat confident, and 40% were not very confident. And we think the hesitancy about overcoming challenges comes across from a couple of things. One of them is just resource constraint and finding the right people who will do the business that needs to get done. Concerns over economic conditions, a lot of fragmentation in industry, and I would suspect there's probably a lot of overlap regarding tools and function and just getting things run smoothly for operations. People are just trying to make things work as best as they can. People's feelings about overcoming these challenges, mostly neutral. I can't say that people are overly optimistic, but people are, all right, I'm just going to read off the slide here for just a second, but improving capital environment is helping people out a little bit, but there's still concerns about interest rates, which I'll talk about again later on. I think that you will see, particularly in the slide we talk about expansion, that if interest rates do drop, there'll be a lot of refinancing and freeing up of capital. But right now, that's a big question mark for people. Next slide. So if you think about where people are going to invest in the coming year, and I think what you see is that investments for this year versus next year, again, there's a lot of commonality in this space with one primary finding that separates the two. But overall, people are investing in technologies people continue to do. And I think this is driven just by the environment that we're in and the pace of change in technology. Everyone knows what Moore's Law is about the rate of technology innovation doubling year over year. This exists in this space as well. People investing in marketing and advertising, which is a function of just needing to keep the base built and concern about people being more competitive, being harder to reach customers. Security enhancements, overall facility improvements, and staff training are also areas of improvement. Not a lot of people are really looking at facility expansions per se or acquisitions. Again, I think it's a function of the marketing space. If we compare that to 2026, which is on the next slide, what you'll see is that the areas of investment are about the same. The ideas of technology being a focus, marketing, advertising, security. but 29% of the people are not looking at making any investment planned in the coming year. We should pause for a second to consider that. The idea of wait and see underscores, I think, an underlying weakness in the idea of people being able to grow their business. And it goes back to the idea of cautious optimism and trying to hold on to what people have. So when people are thinking about how they invest in their businesses last year to this year, they're really looking at what they can do from a systems perspective to improve how their operation runs, how they can build effective marketing to be able to keep the base filled, how to make the facility more secure. And I think that the underlying thing about that, it doesn't come through necessarily in the research. So this is more what I think versus what the numbers show, is that with so many people in social media, when there are bad experiences and when something happens and there's theft in a unit, it shows up in posts and people write about it and it affects people's ability to manage their reputation. And that's also a function of marketing. So when you look at that, it becomes a thing that people are concerned about. And you can move on next slide. I think I'm just going to recapitulate what I just said a second ago, but this year is really about fine tuning and incremental tech adoption. I can't say the word, and optimizing digital marketing. People are trying to get more out of what they have and not trying to spend more to get more. So this affects the next slide, which I think Richard had some points on, just talking about revenue expectations in 2026.
Yeah, so what we saw here is that most everybody expected to have the revenue stay roughly the same. And when we're talking to current customers and new prospects, one of the things that continues to come up is, how will this help me grow revenue? And are there ancillary products that we can start to add into our business to grow revenue, knowing that the expectation from year over year store growth and revenue is going to maintain the same. We have a lot of conversations going with uh, prospects and, like I said, customers of other ways to generate revenue, whether it's through tenant insurance or, creating a much more robust um, um, late fee schedule or even implementing one, just trying to create incremental revenue growth because their expectation is that we will be seeing the same revenue growth from last year.
Yeah. And just add on to that a little bit. One of the things you keep it up in the previous slide just for another second. That's okay. If you think about it differently too, and you think about ancillary services such as insurance, if you do it the right way, and you factor in perhaps other areas in terms of fees and what have you, you can actually generate enough revenue without expanding your facility. So it's like you have an extra 5 or 6 bays without having to actually do an expansion. It was statistically not significant in our data, but one of the things that we did see from a directional perspective, and think about revenue change, there is an aspect of regionality to this. Some areas in the Sun Belt where there's a little more overbuild, you saw a little less optimism, and in areas where there's less stress, for lack of a better phrase, you see a little more optimism. And there are tools out there that help people. And I'm just spacing the Track IQ is one of the tools. It helps people identify where to locate facility space in competition. And the more those tools get in people's hands, the more people are going to be putting facilities closer to where individuals are. That's going to further compress these opportunities for revenue growth. So next slide. So I think with rents flattening, I think this is one area where definitely we're going to see, and it goes on the next slide also, but we're going to see that improving processes and collections and ancillary income services are going to make a difference. The next slide we asked was just about expansion or selling operations. And I'll caveat this slide by saying one thing that I think is also, I don't want to say obvious, but we're just going out surveying people randomly. I don't know how many businesses are planning to sell their operation. It's going to put that out in a generic survey. So we suspect that the zero for considering selling some or all is actually higher. But people don't want to tell people other that information because it's kind of proprietary and it might affect their business or their valuation even if they go into market. So, overall, the things most people probably just stay the remain size, like stay the same size overall. And people doing expansion really is more about within their own facility as opposed to buying new businesses. And again, if you look at the next slide, I think this is where really the credit markets are going to make a difference. If interest rates drop and people are higher rate products, they'll likely be able to refinance or recapitalize their businesses, improve their debt terms. And that might budge these numbers in two different directions. One, there might be an increase in investment, and there may also be more favorable terms to purchase businesses. Certainly, the REITs are a big player in this space, but there's only so many properties to buy. So I think there's going to be some question there. Now, in terms of marketing, I want to spend some time in this slide, and Richard will add some color to this also. But I just want to say at the top level, it's interesting to look at this and to see that so many people rely on their websites as a preferred channel to bring in business and referrals more so than perhaps other tactics that might be useful. 80% of customer acquisition comes from the ideas of traffic and local signage to their business. This has been confirmed across a variety of studies. Richard, if you want to add some color here before I go into some marketing details, feel free to.
Yeah, no, thanks, John. And this one is very, very important right now. What we are having a ton of conversation with customers around their marketing platform, their marketing plan, their lack of plan. And one of the things that is really sticking out is the SEO has just become such a key contributor to winning the popularity contest online. And it's not only in major markets. We do business with customers all across the country and tertiary markets, major markets, and everything in between. And what we're seeing is that the SEO is becoming even more important in the tertiary markets because of the increased competition. As John mentioned, there's areas that are feeling the constraints on the demand, so people are looking elsewhere. And so every market now is becoming much more competitive. And so relying solely on the outdoor signage or the grassroots marketing or T-ball sponsoring, which is all very still much important. We're having a lot of customers talk to us about how do I increase my SEO presence and my paid ads and really get much more of a rounded out marketing plan in markets that weren't really used to that.
Yeah. And I'll just adding on to the SEO, something that's really important right now is to consider generative AI and how that's affecting search overall, and certainly in our own business as Storage Commander. And we're building strategies now for our own operation to be able to accommodate the way that search is going. And right now, we're finding that 10 to 15% of our traffic is now coming off of generative AI. And we expect that number to continue to double year over year. And therefore, there are things you need to do in your business from a marketing perspective. And I'll just talk about the site before I move on to some of these other tactics that are important to consider, which is that how do people query your business? And is your site prepared for that? A lot of people in this space have websites that were built for free. They're not PCI compliant. They're not built for inbound traffic in a way that's optimized to drive your business. And that's something you really need to think about. Even something as simple as like thinking about, you have to please stay in this slide for a little bit longer, is that the way people write queries in generative AI isn't keyword based, but question based. So you have to think about, someone might be writing, what is the best provider in my space, and be able to have an answer for that on your own website. So I don't want to beat the website to death. That's just one tactic. That's the other thing I want to talk about is that in this space where where operators are so hyper local, it was surprising to me to see how few people really leverage other channels that you really need to be involved in. And this includes like local partnerships, trade shows, taking advantage of local directories, particularly Google for Business, and even social media. You need to have a presence across the way that people are shopping. And you'll see overall, the trends have been moving in this way for years, that people complete their shopping before they even call you up. So you need to have a presence in place. When I look at this type of information, I have it in my next slide, but I'll I won't bury the lead. I'll just say right now, too many people are thinking about marketing from the perspective of 2024 and not what 2026 looks like. And I like to tell this analogy at this point also, which is that I'm a fantasy football player and I tend to do well in my leagues. I don't draft last year's lineup when I'm picking my players. I'm picking next year's lineup. And if you draft last year's lineup, you won't get good results. So you see the same in this marketing space. So I think that, and again, I'm being prescriptive here, is I think that if you're an operator in this space and you're not thinking about being where your customers are across multiple channels, you're missing opportunities to engage with these individuals. Next slide, please. So really digital visibility right now is just table stakes. And you need to have a website that is not just optimized, but up to date and modern looking. And be able to work across multiple channels, it's going to become a differentiator in this space. This goes back to something I mentioned earlier, which is about managing your reputation. Certainly, it talks about 50% of people getting business from referrals in the previous slide. Those referrals come from good customer experience, which comes from, again, retaining customers from the moment you sign them up and having the tools to surprise and delight people throughout their experience with you. And if you don't get the good comments, you won't get the good referrals. And as an operator, you don't want to spend 4 hours a week going online to business reviews and making comments about negative things. You want people saying good things about you and amplifying your message. Next slide. So here's some overall takeaways. Um, Efficiency is the leader of success. I mean, we already talked about that. Staffing occupancy becomes a big operational hurdle. And in this space, too, a lot of people are going to having increasingly more remote facilities and having more self-service. This goes back to customer experience. And I would certainly say in that area, particularly when it comes to staffing and having people be able to follow up on things, if you think about how people expect to be responded to, this is not in the deck, just something I want to call out here, is that it's better to set the expectation with your customers early than have them set the expectation and be disappointed. And I'll tell one other digressive story just on this one point. Many years ago when I was a marketer for a company working on behalf of some banks, we were reporting some really good marketing results, and our client was disappointed because they were expecting response rates twice of what we were getting. And we asked them where they got the numbers from. They said, well, we decided these were good numbers, and they were unheard of in the space and not based in reality. If you're able to set expectations early and tell that story to say, this is what good is, and this is what we'll respond to, it avoids the problem of having to defend yourself against good results or good response rates. And so I just was talking about the staffing occupancy, having your staff be able to tell the story and set expectations and make sure that's clear throughout every touch point. It's going to be essential if you want to be successful and not have to continue to refill your base. If you look at strategic expansion, stay on the slide, please. I had a couple more bullets. Thank you. If you think about just rewarding being strategic in your business, I think that'll be a focus to coming year. Using data to help make decisions will separate resilient operators. And again, what I just said before, don't think like 2 years ago, think like 2 years from now and where the business is going. That really concludes this portion of it. There's one more slide that just talks about, if you advance the next slide, it just has a conclusion, which I've already talked about. We could probably open this up to questions right now if you have any, Poppy.
Sorry about that. Needed to unmute myself. Yeah, we have quite a few questions actually. The first one is, how are you tracking the generative AI traffic stat?
So first of all, in my world, I can speak to me. I can't speak for operators. We did not ask that question this year. But as a marketer for this organization, we deal with an agency that's pulling results out of Google and a variety of sources to look at the generative AI that's coming into the pipeline. And there's a different source of how things are coming in. So if you have Google Analytics or some other tool or something like SEMrush, which is another tool that can analyze site traffic, that's where you can get that inbound information to assess what that is. And also look at those keywords that are necessary to be built out or key phrases. You'll see actually in our own website for Storage Commander, we've expanded our FAQ session specifically to have the type of questions that AI is asking so that we can get a response off. And that's driving an increase in traffic for us coming out of generative AI.
I'll add to that real quickly, John. From a software and technology standpoint, your partners that you're using from a marketing standpoint, or if you're doing your own, the key will be making sure that you can tag leads and understand their source within your FSM, your property management system, and that there is a way to kind of tag that so you can collect that information. As John said, we use a partner. Our marketing services team would track that for our partners. But it is a great question because you want to be able to, as you look at 26, 27, start to build a plan around where you want to invest your dollars and how you want to spread your money around to get the best results.
All right, next question. What do you see as the biggest risk to growth in 2026?
That's a great question. The biggest risk that we see, and this is really, kind of sprinkled throughout this presentation and the sentiment that everybody has, is just cautious optimism. The biggest risk being continuing for flat rental rates and that kind of stemming growth, and reinvestment. And so, with that risk, it is imperative that operators get creative on how they're going to generate more revenue so that they can invest in their people, their business, and their processes. But the biggest risk being that the revenues stay flat, and it does stem a little bit of investment into the companies.
Okay, next question. I have a limited budget. Where should I invest among the top three in the survey: technology, marketing, or facility improvements?
That's a great question and a very tough one to answer, but I'll do my best because all three are extremely important. But I think it would. My advice would be, all right, so when I look at people, process, and product, where you kind of grade yourself on how am I doing on my tech stack? How am I doing on my investment in marketing? Am I seeing a return? And is my facility, if I invest in marketing, is my facility something that in a place where people are going to come to it? As we move to a industry where we're doing a little bit more remote management, maybe one thing holds true: is the grass cut, is the weeds pulled, is the facility safe looking? And so, if answering those three questions will help you decide where you can allocate more dollars. If the facility is looking great, it's well maintained, and you're happy with your tech stack, then let's start investing in marketing. But as everybody, as we mentioned, that are facing a year where revenue growth may not be there, all limited budget or not, you're going to have to make these decisions and really, kind of deciding and grading yourself would be our recommendation.
Right, next question. What was the most interesting or surprising fact that you discovered?
John, you've been living in this research, so I'll let you answer that question.
I think, again, and probably because I'm a marketer, I'm surprised by how people don't leverage all the tools in their toolkit to be successful in the space that they're in. So I thought that was interesting, that just be relying on just putting a website and hoping people come. It was, I think there's more that can be done. It doesn't really involve a lot of lift, and particularly working with a marketing partner who can help with some of that information and then deal with reputation management and your website and other stuff, and take some of that off your plate. It might allow you to focus on more attending event and having dinner with someone and building connections of some type, or working with local bankers. So that was interesting to me. The other thing that I just thought was interesting was just people talk about staffing as being a problem, but I didn't see it as being an area of investment. And so if it's going to be a challenge for you, but you're not going to focus on investing in it in the same level, you're kind of setting yourself up to continue that problem. I'd say those two things that pop out at me.
I will add one thing because I think it's something I was not surprised about is the cautious optimism. I think as an industry, self-storage has been resilient through ups and downs and pandemics and so it did not surprise me that there was a cautious optimism. Operators are always taking risk and looking to grow and it's shown through in the data.
Next question. What was the one question you wished you had asked but didn't?
Do you have an opinion, Richard, before I
I,
answer?
I'll let you answer that.
Well, I'll give a just sort of a high level thing. I don't feel that I feel like we could have gone a little bit deeper in terms of acquisition and a little bit deeper in terms of business sizes and trying to bifurcate the data. So what I would say differently is that I don't feel like our sample was big enough at a high level to get the information to be successful in terms of looking at trends. But I would really like to be able to look deeper to say, if I have like under 500 units, how is my business different than I have more than 500 units? And the thing I'll mention here is a plug that when we do this survey again next year, I hope the attendees on this webinar will complete our survey so we can better split that data. And also mention, which we'll say later on, that we'll be at the upcoming SSA and ISS shows at booth 747 for the SSA and 211 for the ISS show. And certainly come talk to us. And if you want to give me more insight of things you want to know, we'll build that into our survey next time we do it. So,
Right. Next question. What is the greatest roadblock operators see to success?
These are really, really great questions. I think the biggest roadblock that operators see or maybe holds them back from success is, and it's interesting because John did bring this up that, some of the biggest expenses that operators have is the people, is the personnel. And, finding the right person or deciding to go away from a full staff manager is a critical decision, and done right can open up a lot of success, but can be a roadblock to a lot of operators. So investing in the right staff, but then also giving them, empowering them with the tools to make them highly efficient and is two things that can open up you know and create success. So I would say that would be what I've seen to be some of the biggest roadblocks from an operator standpoint. John?
you're close to your customers. I'm on a day-to-day basis, so you probably hear more than I do.
Perfect.
All right. Next question. Are there areas that operators have greater problems making investment in than others?
I That's an interesting question because 6 years ago I would have answered it differently than today. Um, and so I think the investment is improved on the technology side. I've been in this industry for a very long time, and what has amazed me over the last 6 years, and a lot of it due to the pandemic, is just the increased amount of technology that's out there that we are now embracing. And so I would have answered that question saying technology would be the one area that I think we lacked in investment, but I do not think that that's the case anymore. And so today, what I think it is really marketing, and not necessarily whether it's investing more or less into marketing, but how. And as John brought up, the AI is huge. How are you spending your marketing dollars? Do you have a marketing budget? Or are you doing the same things you've done for the last 10 years and hoping for better results? And so I think we've embraced tech, we're using tech. There's still more tech to be used, but I think marketing is the area I think could use some fine tuning in regards to how you're spending the dollars.
All right. Next question. If I had $1 figuratively to spend on improvements, where should I spend it?
I want to say in Storage Commander. That's kind of flippant.
That you're not supposed to say that. I'm supposed to say that. But no, I think the I do think that I'll answer this one differently than I just answered the last one, but I do think technology is a good place to look at. As I said earlier, most operators see that their largest expense is the employee cost. And so if you're utilizing technology to help create a better customer experience with more automation and less reliance on the managers, that is a good spend because you're getting better use out of that dollar figuratively, but still making sure that the customers, the tenants experience doesn't suffer.
Mhm. I might add one other thing to that. Might be the same thing you said in a slightly different way, is to look at what your weak point is in your business. I mean, if you have a problem with keeping customers, or if you have a problem with acquiring customers, you have a problem with just running the back office, whatever that problem is where I would likely spend my money to try and make my business as efficient as possible. And it will lift everything else up.
Well said.
All right. Last question. How can attendees participate in next year's survey?
Glad you asked that question. As I just said a second ago, everyone who participates in this event will receive an invite to participate in the survey next year. We will be doing it in September, probably late August through mid-October, and then we'll have the report done in end of November, early December. So it's an annual thing for us now, and hopefully we'll be able to start to tell a greater narrative as we do more and more of these things. Certainly, one of the things we blogged about, and this is digressive, is we looked at how much business has changed from 2015 to 2025. And there's a blog on our website you can take a look at. This talks about how much things have changed in the last 10 years. And this survey will continue to support and tell that narrative as we move forward. So that's how you can participate. And I'm glad, and thank you everyone on this call has participated. We appreciate it.
All right, I think that's the last of the questions, unless somebody wants to shoot one in real quick. For participating in the webinar today, Modern Storage Media would like to offer you a discount code, which you see on your screen right now. Use that code to purchase anything on our website, and you will get a 20% discount as a token of our appreciation for attending. We also invite you to attend the show, which is going to be a spectacular new type of trade show held in November of this year in Atlanta, Georgia. And for more information, go to msmtheshow.com.
Well, thank you very much for your time.
Yeah, thank you. And thank you to MSM for putting this on, and appreciate everybody joining.
Everyone will be receiving an email from us with a link to the presentation. And again, if you have any questions and you want to add them on there real quick before we sign off, those will be answered individually post-webinar. Thank you again for attending, and visit our website to find out when our next webinar is. Thank you, John and Richard.